Hello, everybody. Welcome to the Mouthy Money podcast. I am joined as ever by my good colleague, Chris Tuite, who is head of consumer finance at communications agency MRM. Chris, good morning. Hello.
Hi, Ed. How you doing?
Yeah, good. How are you doing?
Yeah, good.
Busy in the world after post-Trump, post-budget, everything kicking off, all that
There's a
sort of
huge
thing.
amount of chat going on. Yeah, it's been a hard news couple of weeks, but that's lots of fun. I enjoy it.
All downhill to Christmas now. That's all I'm going to say. We are joined today by Alan Davison, who's here to talk to us about really interesting business that he's an integral part of. So Alan is Chief Commercial Officer of a brand new bank called Afin Bank. Alan, welcome. Thank you for joining us.
Thanks, Ed. Great to be here.
Let's get right into it. You're here to tell us about Afin Bank. Just give us a bit of background about yourself, and then tell us a little bit about what Afin Bank is.
Thanks, Ed. Yeah, so Alan Davison. I was thinking this morning, this is my 25th year in financial services. So I can remember when I started my career back in 2000 with the Royal Bank of Scotland. So 17 years in sort of mainstream banking, predominantly retail banking within RBS. Sort of good highs and lows through that period. Obviously, the 2008 financial crisis lived and breathed that. And then the last 6.5, 7 years I spent at Together Financial Services, one of the biggest non-bank lenders in the UK. And then recently just been appointed as Chief Commercial Officer earlier this year. So been here about 6 months now at Afin Bank. So big background in financial services, predominantly mortgages, deposits, etc. So yeah, that's a little bit about me and my background.
So Afin Bank, it's very. I mean, it's so new. It's not. I mean, has it officially launched yet, or where is it at the moment?
So we've just got what they call authorised with restrictions, Ed. So we're being authorised by the regulators, but it's sort of in two phases. So one comes as authorised with restrictions. So you submit a regulatory business plan, you go through a lot of conversations and dialogue with the regulator, prove the capital, etc. And then you get authorised with restrictions, which means largely you can start taking deposits from friends and families. And then you've got to sort of continue building the bank. And then you've got a period of time to then attest to the regulator and hopefully then apply for a variation of permissions to then become a fully licensed bank. So we expect that will take somewhere in the region of sort of 6 to 9 months. So this is really phase one of getting to AWR, and then phase two, hopefully sometime sort of Q2 2025.
Afin's very different from other banks, though, isn't it, Alan? This is kind of what we're really interested in getting you on for. So it's a new bank, a challenger bank, but it's aimed at a specific, aimed primarily towards the African diaspora. Is that correct?
Yeah, so Chris, the journey started probably 2.5 years ago, where the inspiration really came from real experiences of people living in the UK who'd come and sort of lived within the UK from West African countries initially. So our parents are a reinsurance company called Tuite Re. Tuite Re is one of the biggest reinsurance firms within Africa, predominantly based around those West African countries like Sierra Leone, Ghana, Nigeria. So the idea really came from the real experiences of diaspora coming and living and working within the UK. I'm really struggling to get onto the sort of financial ladder, whether that be mortgages, deposits. Current accounts a little bit easier, guys. I think it's easier for the diaspora to open it, but to try and get on the mortgage ladder, the property ladder, has proved a little bit more difficult. So that's where Afin has been created from. Really, how can we support those communities? There's over 1.5 million African diaspora living and working within the UK. So ultimately, we see it as a large untapped market that we're really here to serve and try and really empower them customers really to fulfill their ambitions.
So that's really interesting. Why are they underserved? What's stopping mainstream banks, your high street ones, being able to help these people?
Predominantly, it means most lenders they demand sort of minimum times of residency within the country. So whether that be 2 years or even 3 years in some instances, Chris. So again, they come over, generally do a master's degree. Some of these professionals from the overseas countries, and they've got to be a minimum time of 2-3 years with the high street lenders. So where we're trying to sort of move that a little bit is, I'm not interested whether they've been here 1 day, 1 week, 1 year. as long as they can prove affordability for a mortgage, then we're willing to support that customer and have a look at options available. So we're trying to really push the boundaries on residency. And the reason why the banks get a little bit nervous is they've got no credit footprint, right? So these customers, they're coming into the country, they may have a mobile phone, right? When they land, they may apply for a mobile phone. That's probably the only bit of credit they're going to have. A lot of these banks, they rely on automated underwriting where they look at credit scores. So one of the differences that Afin's trying to push is we've got no minimum credit score. Whilst we'll run a credit score, it will not imply the credit decision either way. Ultimately, we're looking at affordability and plausibility of that mortgage payment moving forward. And if the customer's, I don't know, a trainee accountant or a trainee solicitor coming over and putting roots down in the UK, we should be there to support them and make that journey a little bit easier. The other one, Chris, obviously, I'll not sort of get into it too deep, but the visa status. So a lot come over on temporary visas, working visas, skilled visas, family visas. And again, a lot of lenders require a minimum time remaining on those visas. So sometimes 6 months, sometimes 12 months. And if you think it's only a 2-year visa, you quite quickly get down to having 12 months left or 6 months left. And that'll mean that some, again, lenders won't support these customers, where I'm not really interested, again, in terms of how long's left to run on the visa. I'm interested in terms of what the future looks like. Are they going to reapply? Have they got an application already in to extend the visa? And we'll take a real pragmatic view and common sense view on both residency, time in country, and then visa status. So that's what really is going to set Afin apart.
It's
sorry, Ed.
Sorry, Chris. I think it's really interesting. I mean, especially with regards to mortgages, but you guys have to be making a determination somewhere or another as to the kind of the viability of lending to someone, right? So is there an element of asking them, okay, what profession are you in, or what profession are you training to be a part of, that comes down to it for you? Because we have a lot, you get lots of kind of African doctors, for example, will come to the UK to work, and that's obviously they're highly likely to stay and contribute, and they're probably going to have a pretty secure job because we don't spend a lot of time getting rid of doctors, and there's usually a requirement for more doctors. So that's a pretty safe bet, right? Is that where you're making some of the distinction?
Yes, Ed, it's a great point. So professionals are definitely part of our core target market, right? So again, we know a lot of them come over, and as I said earlier, they do postgrad degrees, and they might end up with one of the big four sort of blue chip sort of accountancy firms like PwC, Deloitte, etc. So we know once they get into their career trajectory is going to be one of an upward trend. So we are definitely focused on the professionals, doctors, accountants, as I say. And the NHS, when you look at some of the stats there, they do employ a lot of African diaspora. And again, as you say, they're probably then looking to put roots down. What's been really enlightening to me, because whilst I've been in financial services for 25 years, I haven't served a diaspora. I'm not a diaspora expert. So I spent 6 months really trying to understand my target market. But what's great about Afin is we've got diaspora working for us. So we're not just focused on them from an outward perspective. Actually, part of our plan and brand is about bringing that diaspora knowledge and experience. So one of my marketing managers who works for me, she's exactly our target market. She came over to the UK with her family 2 years ago. She's a marketing professional. She's a chartered marketeer by sort of accreditation. But for the first 2 years, she was earning good salary. She couldn't get a mortgage anywhere. So again, whilst they may not be professionals, if I can see that there's a long-term trajectory, and there's sort of sustainability and plausibility there, then Ed, we're definitely looking to support them. And I think just to touch on another thing, the thing that will differ us from the high street, but will put us within the specialist sort of bracket, and even with some building societies, we're not going to have any automated underwriting. It's all going to be very manual, very common sense, very pragmatic. So we'll look at each case on its merits. So ultimately, we'll be really supportive and look at ways we can do the mortgage to support the customer, as opposed to a computer saying no approach.
How many people do you think this could potentially help, Alan? You mentioned, you've been thinking about your target market for the last 6 months. I'm just interested how many individuals have been, are likely to be helped by what you guys are going to be doing and getting that access to those, those products that they previously would have been frozen out of for a number of years.
Yeah, I mean, I think the answer's unknown, Chris, if I'm being brutally honest. I mean, we've done a lot of research, but research is only as good as what it says on a piece of paper. So what we do know, so initially we're going to focus on 4 countries. So it's going to be Sierra Leone, Ghana, Nigeria, and the Gambia. We do know there's around 400,000 people. So there's 1.5 African diaspora in totality. There's 400,000 from those countries and communities. So we know there's a sizable opportunity there. What we don't know is how many households there are, what type of visa they're on. Do they want to buy in the first place? I mean, some may just be happy to rent, some may be living with family. So we're going to do some targeted sort of customer profiling where we're going to try and get out and do some customer research with some of the communities we've developed. And I'll talk more about them as we progress through this call. But what we do know is that the number of searches through sourcing systems, there was a 54% increase in mortgage searches for non-UK residents over the course of 2023. So we do know that it is growing in terms of its stature and its opportunity. And I suppose the only other way I could answer the question, we made big announcements and press releases 2 weeks ago when we got our authorised with restrictions, and the take up and the contact and the appetite that we've received in the last 2 weeks has been nothing short of amazing. Whether it be customers themselves, brokers, whether it be local communities, affiliations, the appetite seems as though it's definitely there. So we are very optimistic in terms of what that opportunity is.
And do you think that you'll be expanding out further from that, Alan, or do you guys will stay narrow in your focus and serve those customers you mentioned, or will others from maybe not from the diaspora be able to take advantage of the products you guys are going to produce eventually? What's the plan there?
Yeah, Chris, it's a great question. So as I say, I've only been in 6 months. This journey's been going on, I'd say, about 2 years. And initially the organisation was called All Africa Capital. And obviously we've just recently rebranded to Afin as part of the banking licence. And the sort of slight pivot we've done when All Africa Capital was going through its sort of review, it was going to be probably 100% focused on the African diaspora. But to try and then serve more customers and be more diverse in terms of our approach, and with my experience of working in financial services for the last 25 years, as I said earlier, I think there's opportunity for us to support other customers, such as professionals living and breathing within the UK mortgage market today. So again, offering increased loan to income ratios. Again, you can see their income's going to go on a certain trajectory. Why would we want to try and support those customers getting on the property ladder? The other area which I think is really underserved within the UK mortgage market, and especially again the high street, is self-employed. Again, just because of the nature of their income. So I've learned a lot about that proposition over the last 7 years in my previous employment. We are looking to try and support the self-employed customers who may not have that steady income stream and need a slightly more common sense, pragmatic approach to underwriting their opportunity to get a mortgage. And then the last one, which is really interesting and still in development, but I read more and more about high net worth customers really struggling to get a mortgage. And again, that's generally because of the income streams that they're really asset rich, but maybe income poor in terms of the way they've set the structures up in terms of their income and assets. And I think, again, they struggle to try and get high street banks to support that. So whilst we are predominantly focused on the African diaspora and want to stay true to our roots and our parent company, we definitely are looking to exploit other underserved communities and professions within the UK.
Sounds great. And sorry, just one more for me, Ed. I'm hogging it a bit here, but I'm really interested. Like
always, Chris,
always, yeah. This is the wider point, I think, which I'm really interested in. There's been an explosion of challenger banks, is the phrase that we would use in our world. Perhaps listeners might be familiar with that or not. And I've noticed quite a few sort of serving smaller communities, but looking to do that in a more tailored fashion, so that because they understand the unique challenges of those communities. So there've been different sort of banks aimed at diaspora. I think Monies is one, isn't it? Which was aimed at a different diaspora coming from the east of Europe, I think. I've seen one targeted at digital nomads called Bunk, which is looking to try and deal with the specific needs of those individuals. Why do you think that the larger retail banks haven't been able to service these people as well as they would like? Are they interested? Do you think it's just too difficult from a logistical standpoint to make a product that stands up for everyone? And do you expect more of these kind of more niche challenger banks to enter, survive, and thrive? I suppose you would, but what is your general take on that? I'm sure you mentioned you've done your research, you've done your market, looked at your market carefully. It seems like there's more and more of these, so they must make sense somewhere along the line. Just interested in your views as to why this has started to happen so much.
Yeah, great question. I mean, I don't know whether you know, Chris and Ed, but there's 38 banks that have been licensed by the regulator since 2013. I think we're the 39th, and I think eight of them don't exist today. So you could say there has been a bit of an influx. I mean, the other way I'd say this is the high street are still the go-to, right? They write the majority of mortgages. They've got the majority of current accounts, majority deposits. So the high street will always be the high street. But if I
So
liken
sorry,
it to
just
the
John. Sorry, Alan. On that, just in terms of high street, we're talking, Barclays, Santander, all those ones that you guys, the listeners, would have seen on the
yeah,
high street, obviously, and would be more likely to be dealing with. Sorry to cut across you there, but just so
no,
we're
no
clear.
worries. Yeah, so I mean, if you think of them larger banks, right, they're like an oil tanker. So they've been around for a long time. They've got a lot of customers. They've got very loyal customers, and but again, I think what consumers are looking for is that sort of difference, that sort of choice in terms of where can I be served. And I liken a lot of the things that a lot of challengers have done. When I joined banking in 2000, it very much felt like a community. When I joined Royal Bank of Scotland, it was very focused on the community, being a high street within the village, the towns. And again, we know that high streets have sort of retrenched a little bit from the high street banks have retrenched a little bit from the high street and branch closures, whatever it may be. So again, I think just the scale and the size of these high street banks and the larger banks make it a bit more difficult to be as focused and targeted on consumers as what some of these challenges could be. So that's my sort of overarching. And I think when I look at the list of the 38, 39 challenger banks that have come through, I think the one thing that stands them apart, Chris, is they have got a real focused, targeted niche of what they want to be, what they want to stand for. So I think we're one of the main differences in terms of our target market, the diaspora. But there's banks that have gone for the SMEs, the banks that have gone for deposit holders. So again, each one of them have come out with a real plan on who they want to be and why they want to be it. I think as that scales and that grows, that's where the challenges become for challenger banks to really then make a difference within the sort of banking world as a whole. But ultimately, I think the reason why we're seeing success is generally because of that niche target market that they've identified an opportunity and they've created a proposition that serves that opportunity and they've done well at it. I think the other thing, obviously, is because they're not, they haven't got the legacy systems and the legacy tech. They can be a bit more innovative, so they can really look at how tech can really drive it. And again, a lot of the big banks have moved forward with tech. Some of the banking apps out there from some of the big banks is great, but I think the pace of change within the challenges is a lot more agile and a lot more quick than what some of the high streets and some of the biggest banks may be. So I think having a focused target market, being really innovation, and then being really agile around what does the customer want and how do we best serve that customer need.
So I think before we finish, I think it's really interesting, and I think it's quite compelling because it's there's clearly a community here that's not being served by the kind of traditional, if we're thinking of mortgages and that kind of stuff. And I think with some of those fintechs that we've seen in the past, like you said, it's kind of current account. A lot of it's kind of current account focused, very competitive space, difficult to make money out of current accounts and that kind of thing. But obviously with you guys, mortgages and savings, there's a kind of clear, there's a clear path to how you earn a living and how you, make it work. Are you guys doing savings on the other side to help fund the mortgages? Is that in the works?
Yeah, we'll have deposit account via mobile app for launch. So we're just in the throes of testing that now. So again, quite real snazzy sort of tech through mobile first. So we'll have fixed rate deposits, notice accounts, and ultimately that's how we'll raise our funding to then ultimately go out and generate the mortgages. So we'll have a very competitively priced, because again, if you look at the challenges, the difference between the challenges and the bigger banks, you have got to be very competitive on the price to, in effect, garner that interest and get that deposit money through the door. And again, the other thing, the original business plan that we had within All Africa prior to rebranding to Afin, we still haven't ruled out current accounts. So I think you hit the nail on the head. Current accounts is a bit more difficult to do in terms of cost, size, scale, overheads, etc. So we'll really learn into that community. But again, it's not a problem we've identified. We think the diaspora are well served by a lot of the current account providers within the UK. We don't think we've got something to really go and compete at a big level on that. So we're trying to sort of tap into the niche areas, as you say, around the mortgages. So that's our focus. raise the money through competitively priced deposits, and really then make mortgage products and propositions that really get to the heart of the problems that the African diaspora and other, as I say, underserved customers like self-employed, high net worth and professionals maybe don't get the support with.
So you mentioned launch there. Sorry, Ed, just quickly. When can people expect to be able to come to Afin and start borrowing or saving?
Yeah, so again, a lot is down to how we get through the next period of mobilisation, it's called. So we're currently estimating that's probably going to take us towards the sort of mid to end of Q2 next year. So I'm going to say somewhere between sort of May and July. Chris, if you had to sort of hold me to it, I think we'll be ready by half year.
We won't hold you to it, Alan. Don't worry, we won't. Just want to give the listeners an indication when to look out for, So.
Yeah, I mean, ultimately, because we've now launched in essence and we've got the brand out there, we've got a website live, we're on socials, we will be out there sort of drumming up some interest in terms of what we're about. And the one thing I want to do, whether it's with intermediaries, whether it's direct with customers, I want to take them on the journey of what our propositions are. I don't want to sit here in my sort of dining room and build propositions that don't talk to customers. So getting out and doing some real customer research is vital. And if we can do more and more of that ahead of launch, then I think we'll be setting ourselves up for success, hopefully.
Alan, I'm not going to ask you for an exclusive on the interest rates that you're going to be offering on the savings and the mortgages side, because I think by May to July next year, I think things might be a little bit different than they are now. It's a super competitive space, and obviously rates are coming down. You look at I think it was Trading 212 and Moneybox have been playing chicken at the moment with the base rates coming down, and they're putting their rates up because they're desperate for kind of customers. So I think we'll leave it with, I'll look forward with interest to seeing what the offering is.
You can give us a heads up just in advance, Alan, and we'll be able to tell the listeners on the podcast. Maybe we'll see. Try my luck.
Yeah. But
Thanks,
with that,
James.
I think really interesting discussion. I think really interesting business actually. Just trying something a little bit different in terms of who you want to talk to. So I think definitely have to say watch this space. So Alan, we're going to stay on for a little bit and talk about a couple of other things. But thank you very much for joining us. And again, we look forward to seeing you soon in the future.
Thanks, Ed. Thanks, Chris. Speak soon.
Thanks, Alan.
Thank you.
See you. Bye. So,
Chris, really interesting proposition. Talking to, I think it's a good idea, isn't it? They've seen a space where it's kind of this is, these are customers who are not being served properly by the market. So let's dig into it, right? It's kind of the long and short of it, ultimately. What do you think?
Exactly. It's quite interesting. The wider piece is really kind of fascinating to me in that, Alan outlined why that's the case, but existing banks struggle to deal with some of these different types of niche customers, and you don't want to end up people being penalised because of one aspect of their financial history doesn't stack up, and so that kind of common sense approach you mentioned, I think, is really key, and it's just shown how much with these. Did he say 38, 39? They'd be the 39th challenger bank since 20.
And eight of those aren't operating anymore anyway. So
the demand has definitely been there, and people have identified it, and for the most part, it's been workable. So I think for me, it's great news that people who find themselves in slightly non-conventional financial situations are still able to access financial services. Number one, you need that, right? Shouldn't be anything to stop people from doing that. I think the second thing is just the choice that will bring. And it was really interesting. Look, they're starting with the African diaspora, and that makes tons of sense for what they stand for and why they want to be kind of doing that, where the opportunity is. But there is going to be scope to move that out to people with where a similar attitude might help them. So the self-employed, he did mention high net worth there, and others as well. So for me, it seems like the technology changes has made it easier, in inverted commas, to bring these banks to life, to create more competition. More competition can only be a good thing because it's more options for potentially, people like us headed down the line. So, if for the people listening to this, I think if your big bank says no, that doesn't mean it's the end of the conversation. There's plenty of others out there who are willing to work around the problem. I think that's just kind of important. And then, as you said, the deposit account thing will be really interesting because that kind of works on two levels a lot of the time. They need to get the deposits in so they can lend it out like any sustainable bank often. That's how it works. Get the savings in, charge it out as lending, and make sure you make a bit of a margin on that. But also, I don't know about you, but I think the savings rates thing also acts as a bit of marketing strategy sometimes, because there's so much chat about where to get the best savings rates that if you put yourself at the top of the best buy tables, then people are going to know who you are, or at least going to kind of register with you. So I don't know, there was no confirmation of that from Afin. I'm not suggesting that, but I think generally there's a kind of a two-way conversation going on there, which people can benefit from if they want to move their money around. So yeah, it's I'll be watching with great interest. I think it's a really nice idea, and the records seem to suggest that it's been a successful one for the majority of the banks who've come and tried to build up a proposition for these niche audiences.
Now we're going to just for a few minutes change topic at breakneck speed. I think is the way. We talked a little bit last week on the podcast about it with a guest who came on to tell us about kind of what was going on in the wake of Trump winning the election.
Althea from Saxo,
yeah, which was really, really interesting. Lots been going on since then. The most notable, as we record, is Bitcoin. To use a phrase, is going parabolic, shall we say, hitting all-time highs.
Has it gone to the moon yet, or what? Is it?
Not quite at the moon. Where the moon is, I think, is up for discussion, Chris. But yeah, I think, I don't know, it's just kind of worth remarking on, I guess, that the Bitcoin is absolutely flying, and why that is, I don't know if you've seen anything in particular, but I mean, I certainly have some views on it.
Well, I think the Trump thing's obviously big, as we touched on, because he's trying to make America. Not only is he trying to make America great again, although it's debatable about whether it is great already, but also he's trying to make it a home for crypto. So there was a lot of speculation pre-election, wasn't there, that was going to be a thing? But what do you think? What's your take, Ed? What do you think? What the fundamentals?
I think Bitcoin is long past the point of us asking, is it a legitimate thing or not, kind of thing. Like, it's here. There's major institutions with significant amounts of money in it, provably significant amounts of money in it. It's not going away anytime soon. I think one of the more compelling things I've heard about Bitcoin is that it basically acts as a reverse tracker of basically how easy the money supply is. So the more money there is sloshing around the system, the better off Bitcoin is going to be, basically, and that's because things like the dollar are devaluing as they print more and more of it. The pound is devaluing as they print more and more of it. And when I say print more and more of it, I mean selling bonds on the bond market and that kind of thing in order to fund increasingly expensive government budgets and such, creates inflation, devalues the currency that we use. And Bitcoin is, at this point, essentially a natural reaction to that. But Bitcoin's not the only thing doing really well. Gold is doing really well for the similar reasons, but also to do with the kind of geopolitics of where we are in 2024. So it's all kind of kicking off and going on. I mean, whether it'll keep up the kind of extraordinary gains, I think remains to be seen. We'll see what happens with Trump come January. I don't think it's going anywhere at the moment, but it's always going to be up and down. And obviously, I think anybody who's interested in buying Bitcoin and holding it needs to do their research properly on it. And, would only advocate kind of holding it as a part of a much bigger diversified set of a portfolio. And, investing carries risk, as we always say. And buyer beware. But yeah,
no,
really,
I mean, it's close to 82,000. I think I was just checking here. It's at 81,751. Is that close? I don't know. Maybe I'm doing a bit of rounding up there, Ed. But I mean, I think that's an all-time high. It's not far off. It's hitting all-time highs. Whether it will get to 100,000 is the next kind of big milestone, I suppose, in Bitcoin's journey. I can't help but think, is it too late? Because you heard about people in the early stages of it getting incredibly rich off it. I think that's gone, isn't it? You're not going to see those kind of gains at all. So it's about whether or not, as you say, you can get some nice steady returns off the part of a wider portfolio. And that's kind of where I bought it. I'm holding it with some friends of mine who threw some money in, and it's like, well, we're watching it with interest just to see what happens. But I don't think I'd be betting the house on it anytime soon. That would be my.
I mean, a Bitcoin maximalist would tell you that it's never too late, because the system on the fiat system on which the back of which it was created is going to hell in a handcart. So buy Bitcoin. That's what.
So what do you mean by fiat? Sorry, Ed, just for.
Well, currencies that have no value based in anything other than the government telling you this is how much it's worth.
So things like pounds, sterling, dollars, euros.
It's value by fiat, basically. Like, we tell you it's worth X, so just rely on us that that's how much it's worth. And the system that, as it functions, is designed to create a small amount of inflation because that prevents people from sitting on cash. It encourages investment into the economy, etc. But it also means that the government can print money to spend, basically. I'm oversimplifying massively there. The other thing as well is a Bitcoin, maximalist would tell you it's kind of like saying, imagine if it were the year were 1990, and you said, I don't want to buy Apple stocks. It's already risen a lot. Why is it going to go up anymore? And here we are, 35 years later, and Apple's worth a hell of a lot more today than it was in 1990. And you could potentially make a similar argument for Bitcoin. Of course, there were lots of other stocks out there in 1990 that had made money in the 80s and then went to zero in the years after. So, it comes down to a judgment about whether you're backing the right one or not, basically.
Yeah.
And that's a judgment call for everybody to make on their own. Yeah.
It's interesting, though. It's fascinating to see. And as we sort of move more into, decentralized finance and where technology will take money, I think we should all have one eye on it, actually, because it is going to evolve. Central banks are already talking about their own central bank digital currencies. Digitalization is happening at breakneck speed, faster than at any other point in history. So, obviously, but I think it's at that stage now where, we're not a million miles away from this brave new world. And what is going to be in it? Like you mentioned, Apple there in 1990, probably no one would have predicted that we'd all have iPhones in doing every single aspect of our lives. So, yeah, it is. If you kind of throw forward 20 years and think about what could be going on, it does make the head explode, but also, it's quite exciting.
Yeah, look, to be vastly more putting it in historic and philosophical terms, we're at a point where now you need to decide whether this digital money and digital finance and all this kind of stuff, either that's going to be the direction of travel, so you've got to get on board with it, or you really are of a mindset that one day we're all going to go back to trading things in, gold and silver coinage because the entire system's going to collapse in on itself. We're now at a kind of point where you need to make a choice between one or the other, because the system as it exists today, with fiat currencies that inflate away all the value and that kind of stuff, it's not going to last forever. Either we're going to go into a totally digital setting or not. I think there's an inevitability there, unless we go completely backwards the other way, basically, to be very fundamentalist about it. But perhaps a discussion for another day. Right, Chris, I think we'll probably leave it there. There is some interesting stuff coming up this week, such as Rachel Reeves giving a Mansion House speech, which I think is being trailed a little bit, but probably not as much as we might think. I think we're going to catch up on that next week and maybe pick through some of the announcements that we see in there and what could be going on. So that's something to look forward to for listeners. Chris, thanks again, as ever, for joining me.
My pleasure.
And thank you, everybody, for listening. We'll speak to you soon. Thank you very much, and goodbye. Don't forget to subscribe to the show on Spotify, Apple Podcast, or YouTube. You can also follow all our latest updates on TikTok, Instagram, or X. Finally, check out all our money stories on the Mouthy Money website and subscribe to our weekly newsletter for all the latest straight to your inbox. Thank you, and goodbye.